So the reason for curiosity, obviously in terms of curiosity and piquing curiosity, is that we ask a student that has really just finished their proposal stage and is in the very early stages of their research, so probably just around their literature review, to come in and share their topic. And the purpose of that is we used to do it with students that were really almost finished. And what we found was the purpose of all your minds being here is because of this kind of contribution that you all make. And the students were so far into their study that they almost couldn't make it, and it almost made students a bit defensive because they were a bit panicked. I've already done my methodology and I'm already edited, and now you're telling me. So we didn't find we got the same engagement. So last year we shifted to say it's a much earlier stage. So when you ask the questions, etc., sometimes the students may not be able to answer you, but that's the whole purpose of having this. There are other forums like the oral defenses, etc., where the students have to defend the entirety of their study. This is brilliant minds in a room who can probe them and get things going. So I will hand over to my esteemed academic colleagues. I shall step out of my circle. Prof. Govender and Dr. Franzel Deploy-Siliers, who's our Executive Dean, and Prof. Govender, who's our Vice Principal. Franzel is new to Da Vinci, so it will be the first time some of you have met her. And so from that perspective, I think that I'm going to leave the academics to debate.
This afternoon we have Nkhangweleni. Am I correct?
Yes.
Tongue twister. Eric Masindi, the Head of Prudential at Barclays Africa. He's our PhD student whose thesis is titled The Impact of Regulation and Supervision on the Profitability and Risk Profile of Banks in Select African Countries. Eric certainly has extensive expertise in his field of research, and I'm sure we can all look forward to an engaging session this afternoon.
The main aim of this study is to empirically analyze the impact of regulation and supervision on banks, especially their profitability and risk profile, in the context of the ongoing regulatory and supervisory reforms across the globe, which in turn comes back to us locally and in the continent. This is also in the context of the financial crisis that happens, like the 2007-2008 financial crisis, which resulted in so many reforms, including the Basel III, Basel IV, and all the other reforms that comes from the G20 countries. So this study is in its early stages, as it was said before, and so we will probably take on comments and all the other good or positive contributions to how the study will be shaped as well going forward. So from the literature, banks have long been a major actor or a stimulus in the economic system through their actions on liquidity. They drive household consumptions. You buy through the banks. They also help companies in investments. They help entrepreneurs in their entrepreneurship by providing money. They hire people, so they are also involved in labor market, and that's where they come in as they stimulate the economic in the growth or not growing of those economies. They are also used in financial intermediation. They provide platforms for effective mechanisms to make payments. They implement regulatory policies. Treasury come with policy, bank then banked, and then they go there and they implement those. And that is happening probably in all globally as well. Because of that, governments tend to regulate and supervise banks. Primarily, that is done to protect depositors and also to encourage and maintain a stable state of financial system. They also try and mitigate against uncertainty on any inherent risk on the entire financial systems. Because if the whole financial system collapse, and we have already seen in the literature that banks do stimulate economic growth, it means the economy will grow, the economy will also collapse, and that will affect the entire communities and populace of the countries.
Okay. Can I just come into the question? I think thanks to the background and where basically create some kind of rationale because risk. How do you intend to approach the study?
The intention is to start by looking at the literature on the regulation and on banks and financial institutions globally.
I think you refer to Basel I, Basel II.
Yes.
That's fine. That's the international governance for banks.
Yes.
But in this particular case, you have you're going to probe something, isn't it?
Yes.
And using your perspective, your lens. So maybe share that with us.
There is an anecdotal kind of narrative that looks at regulation and banks and say, okay, if it is like this, its impacts on the profitability or the bank statements. However, there is fewer studies in the literature that shows that companies have a way of quantifying the impact of regulation and supervision on their profitability. This is especially when it is constant and is evolving and it is impacted by external events.
So you propose to measure this impact and quantify it? Or you're just going to perhaps narrate something about?
No, I propose to quantify it in a way where you can look at liquidity ratios on bank statements and try and forecast profitability over a period. So those variables will move up and down, and at certain point you will be able to pick up that at that point this is the impact of regulation going up and down on that forecast.
What for me would be interesting is to find out which countries have regulations which are harsher or more relaxed than the others, and then to see whether that the different style of regulation has a different bearing on the profitability, because then that would lead to a conclusion as to the type of regulation which leads to profitability or impedes profitability, and that would be a very valuable conclusion.
Yeah. If you think of the two examples with African Bank, it's resuscitated now, but they went through a demise, I would say. We don't know what happened to VBS. I mean, that was reckless, perhaps. But would you perhaps point the fingers at the regulation or lack of compliance with regulations?
If my memory serves me well, African Bank went under despite the high capital adequacy ratio, which means they were meeting the regulations, but the risk appetite probably might be the one that pushed them down. So if in that comparison, that's why I brought it into the equation of my study.
So in that case, what I think it was reckless lending, isn't it?
Yes.
That's what happened in the US as well in terms of the 2006-2008 crash, isn't it?
Yes, precisely.
But then we have all these regulations, the Basel I, Basel II.
Yeah.
So where is the root cause?
That's where I'm getting at. If the risk appetite of banks is monitored through regulation and supervision, but we can't pick up the root cause of why they collapse, regardless of them meeting those regulations, then what is it? So our study will try and look at those kind of questions as well as sub-questions within the bigger action.
So if you're doing it if your paradigm is a positivist paradigm and you're using quantitative, then I assume quantitative research.
Yes.
Then for me, exploratory research and doing it from an interpretivist paradigm or even from some of the critical studies side of things would make sense in terms of trying to get an in-depth understanding. So for me, I'd like to understand if you're trying to solve something, and then I could understand the positivist, or if you're trying to get a more in-depth understanding around this, and I don't come with a banking background, so
it's actually both.
So the triangulation.
Yeah, the triangulation
I
between
think
those.
that would be awesome.
So you can't do the one without the other. That's why the profitability and risk appetite comes in one step.
Okay.
Yeah.
Because you explained
Yes, that
the
makes
debt
sense.
ratio, what is this?
Yeah.
That's complying,
Yeah.
they maintain that above a certain threshold.
Yes.
But then there's underlying things that you're trying
You're
to.
trying to flush
explore.
out.
Okay, so
Yeah.
one would be from an exploratory, and that part you'd have to do quantitatively. I'm saying not the exploratory, the other part,
Sure.
to get to the exploration.
Yes.
Okay.
So if we're going with a positivistic paradigm, then a word like impact, how do you operationalize impacts? In other words, how are you going to break it down into dimensions and indicators?
If you take profitability as a function of certain variables in the balance sheet and income statement of a bank, that's how you now bring in that quantification and impact, because those variables will start to move either up and down at certain intervals. You should be able to go and say, if it's 2007, 2008, and the certain variables were moving in a certain way, but when those new regulations comes after the collapse of banks in 2007, 2008, then you can proxy them in such a way that, oh, okay, there is the impact of that.
But is that an impact or is that a trend?
We will see how it goes. It might be an impact or a trend, but we can't say it now at an early stage.
And how will you be able to convince me that it is the regulation that had the influence and nothing else?
Because in that equation that I'm talking about on profitability, you will look at bank-specific variables, macroeconomic specific variables, and industry-related variables. So those things should move differently when certain things happen in the environment where banks operate. So we decided to bring in the macroeconomic and the bank-specific and the industry. We can dummy it in the study to see how those things move. So.
One challenge you're going to have is that, in terms of determining impact of legislation, you see the other variables like profitability you can measure, right? But how can you attribute it to as a result of a certain regulation? So that normally, those kind of things you measure over a long time, you understand?
Yeah.
You determine and you monitor and measure over a long time. So what is going to be your study space?
The data that we are getting from Bank Scope and the World Development Indicator can go as far as 2000 to date. So it will capture some of the major events that happen within the regulation space, globally and locally, and also within the continent. So that will help assist us in trying to quantify.
So you're going to isolate and you'll be able to manage
those kind of things, yeah.
I think one of the issues you can face, because you're talking about liquidity coverage ratios as one of the things you're going to use,
Yes.
is that with the constant changes that are happening with Basel, before it was not LCR,
Yeah.
right? It was other reserve requirements that you need to have.
Yeah.
So aligning the differences between the pre-2008 and post-2008 methodology in the analysis.
Those are some of the things that the study need to explore, because you're looking at all these regulations and supervisory regimes changing as and when things happen. So you're right, actually. Basel III is supposed to be implemented, especially in South Africa now. But before we even finish that implementation, 4 is kicking in. We will also have to probably, in that same vein, look at regulations that comes in, not because the market requires that regulation, but because the country where we operate is a member of G20, for example. So those things we will have to bring them in as part of the assumptions in our study to say, this is doing this in where, because
my other question is the adequacy of the formulas themselves.
Yes.
If Africa Bank felt that the capital adequacy ratio was very high, in more technical terms, did they calculate the risk-weighted assets properly?
That's the, yeah, we will see.
Which methods are they using to calculate risk-weighted
That's the
assets?
thing that
How
we,
to calculate?
that's the issue that we need to dwell with in the study, because you will need to standardize your variables. Otherwise, you will hit a snag, like you are just saying. So if you have a panel data and you don't standardize that, then you will definitely have those snags. We will maneuver as we go along.
All right,
But that is a good.
let's not drift too much into the technical aspects of this thing. Let's look at the merits of the study and how we can add value to the study. Gibson?
Then what you should, maybe you can consider, because if you look at if you say the impact of regulation and supervision, in my policy knowledge, that regulation serves to supervise, because regulations are the how part of the act. The act is the what, then the regs are the how you do it. So the law itself, legislation, maybe we could consider, say maybe government legislation instead of saying regulation and supervision. Government legislation, and also just maybe just look at the two things: RIA, regulating impact assessment, because when government introduces new legislation, they do RIA, or they call it a SEAS, Social Economic Impact Assessment System. That will tell us, say for example in South Africa, I'm not a well-traveled guy, there's got NCA, National Credit Act. If you look from the date of promulgation, the president signed it to law until today, what happened? You know, because there are certain banks that sneaked loans behind the back of the government.
Yeah.
Where do you zoom into it? Because we want to make both Zimbabwe, Zambia, it's going to be a long journey.
Yeah.
Yeah.
I noted it. I will look at it. Thanks.
What do you hope to contribute in terms of the knowledge space?
The main contribution will be mainly to policymakers. Do we regulate every time that we have a crisis? Or do we go and do a root cause analysis? In so doing, you avoid getting into the bandwagon of always being relevant to the global regulatory frameworks, like the Basels and the like, where you spend a lot of money, but before you even see the rewards of the implementation, another one is hitting you because of what is happening globally. Is it a one-size-fits-all, or do you have to specifically look at your environment when you do policies and regulation?
So you feel the banking sector will benefit from this?
Yeah, I
or
think so.
You think government sectors, the regulators?
I think both the regulated and the
Registrar
regulators
banks and those
will benefit from this. I just have a feeling, sitting from a bank perspective, we spend quite a lot of money in trying to meet regulatory requirements. Some of them don't even assist our clientele.
If I have to look at the numbers from 2008 to now, 2020, our compliance and risk teams have quadrupled. And that's a big problem for banks, because you talk about profitability.
So what do you think you should look at? I'm saying as part of the study, because remember it's in the early stages
Yeah.
you can still impact it.
Absolutely. I don't think the only value should be regulators from a policy making perspective. Because I mean, at the moment we're looking at this technological advancement and the future of how banks operate and how we manage our risks, and then looks quite different. So have a look at how we then manage supervision in a futuristic environment. So that's what we got, digital and tech.
So the premise, I guess, or point of departure is that these regulations are strangulating business, impeding, stunting business growth, etc. But then the same breath, you've got to look at international developments in terms of money laundering.
Yes.
The FICE and FICA and those kind of things came up because of that.
Yeah.
So it's governance issues as well.
Well, I think that if we can find a way to bridge the gap of the amount of risk specialists that we have currently, because I read an article last week, it was talking about in the near future, when it comes to the banking sector, due to the high phishing and fraud stuff, we need to bridge that gap, and there won't be enough skills or the software developers that are there to close those gaps. So we need to look at holistically when it comes to risk management as a whole, as opposed to just looking at only the impact. What are the probabilities besides the impact? Because the impacts, yes, they might be positive. The impacts don't necessarily mean that they will be negative. We do have good risks and there are bad risks. We just need to find a way of how to measure them so that I think he can then work with that.
Is it supervision on the side of the bank or on the side of the regulators?
On the side of the regulators supervising banks.
Okay.
So once a new regulation comes in,
yes.
you will
What
have
about-
regulators wanting you to comply with that regulation.
Okay.
So in many instances, you find that you are spending in order to meet the requirement of the regulator.
Right. So what about the enforcement or something like that? I don't know if is that one of the
Enforcement will come as supervisors comes and you are not complying.
You mean the regulator?
Yeah, the regulators
Okay,
are not
okay.
going to disperse.
So just a quick one on the methods. So it's a positivist method, right? So it's quantitative.
Yes.
But some very good points were raised about the non-quantitative aspects. So I'm just wondering that maybe this will be better methodologically as a mixed method.
I think based on both your points, exploration is important, but who the partners are that you plan to speak to. So from my side, I'd like to understand who your sample will be, and what I don't obviously expect you to name by name, but will it be banks and regulators? Will it be across regions?
The problem with regulation is that, especially with the banks, you have one regulator in each country.
Yeah.
However, you have many banks that operate in different countries. So if you go and say, I'm choosing, for example, we are thinking of exploring about 8 countries, select about 8 countries, and maybe 5 or 6 banks in each country. However, some of the banks are cross-border operations, in which case we will probably look at them from a where they report.
You've got all these different country regulators, plus all these banks, and I'm saying if I come from a supervision perspective towards, to a student, I think you need to really caution against that amount. I'm saying whether you're doing it as part of a study that's going to impact for your physical doctorate, I think you need to be cautious around making your sample so complex that the data that you're going to try analyze is really going to be quite difficult. So I think you need to be quite purposeful around that, unless you want to be doing your doctorate for 10 to 15 years. Because remember, you're saying you're coming from a quantitative or a mixed method. In purposive samples, which is more qualitative based, it is easy to justify why you have only selected 5 or 6. When you're coming from a more quantitative approach, or from a positivistic paradigm around things, it makes it very complex, because now, how are you going to justify that you've only selected those and you're going to have to go with a representative sample? Whereas with qualitative research, you can say that it was because of X, Y, and Z, accessibility or whatever. So that's just what I'm putting out there. That will be a bit of a possible challenge.
Sorry, Mala, but impact still bothers me, because something has an impact on something.
Yeah, because I just want to say that an impact is a strong word. It's like an accident. So I'm not seeing that coming out of the conversation. So you create the expectation in your title. So maybe it's something you need to look at in the title as well.
But also think about your unit of analysis and where are you going to source your data from? Where are you going to get the data that you're going to work with?
Yeah. So audited financials of banks are available. They are free as well.
Published.
They are published as well. So those are some of the areas. The only thing is that we are using secondary data, so we'll have to zoom into it.
Which variables are you going to pick in regulation? Which can then help you. If there are not too many, then you can manage a huge sample.
Yes, that's a very good point.
Yeah, it's a very good point. We have looked at that with Prof C. We have identified certain variables However, we can't go and really confirm on them before we start to see how they will react. So as more and more data is collected, we will be able to choose a certain set of variables.
It can't only be regulations, so maybe the title thing should change because the impact of variables on the risk.
It's something he's noting. Thank you very much, Katrina, for that input.
The banks are not going to be regulated by the Prudential Authority, so, but the FSCA is also just quite clear.
Yeah, that is mainly in South Africa. In Africa, probably it's only South Africa. So the fiscal hasn't really put their standards together. They are looking around to fully with the banks within Barclays as well. So I just hope by the time we finish the study, probably they wouldn't have at the same level as the PA, but it's in my mind as well.
Yeah,
But I make a good point in terms of, in South Africa, we've got two, my understanding, we have two regulators.
Yes.
As a bank.
Yeah.
But if you're going to go into other African countries, you probably have.
Yeah.
When you're such a super specialist like you are, I mean, you can just literally read your credentials and feel humbled by your banking experience. You've got to be careful as a doctoral scholar to remember that this isn't only a business problem, but it is also, this is towards the highest academic level of scrutiny and the most advanced research level. So if you're doing this, and that's what I often find with Da Vinci students, because you're all such, and alumnus, because you're all esteemed business practitioners, often the research becomes a bit of a case study towards a business problem, which is a project, which it absolutely must be to solve your industry problem. But when it shifts back into the academic space, we have to always make sure, and that might mean, unfortunately, for those of you that are doing it as an implementation into your organizations, that you have a bit of a tandem process going. I will use that sample for my business case study and how I'm going to implement it as part of my senior level executive position. But for my doctoral aspect, I will only be looking at X and Y. And that's something I think it's hard to consider at times, but you have to remember that the depth is required at the doctoral level at level 10.
And also the unique contribution that you will be making and the originality of the study.
Sure. I don't know, I heard something like the World Bank, you're going to be relying on that, is that?
We'll look at that as well for the macroeconomic variables. We'll look at bank scope for the bank-specific variables. Depending on how the model is formulated, you might dummy for industry variables, but we are still away from there.
I think you're not going to publish financial statements, but you're taking a critical look at those and look at impact. So you're going to your knowledge, your contribution will be the impact of these things, because this is in the public domain already. But the public don't look to risks and the impact. That's what you're trying to probe. Am I correct?
Yes.
So your contribution would be making people aware of what's happening, or how these regulators are strangling business development or the development of banks, as well as the profitability.
There is some work that was done in Europe by Barth. He went and did the same work in North America. But that gap in our environment, especially emerging market and developing markets, is there.
What is the gap?
The gap is that there's no work that has been done in that space.
I thought you articulated quite well to say the regulatory instrument of Pillar 3, which is this, we are part of the G20 company, we may not be advancing as the developed world as well. So maybe your study could help there.
So those are the things that I want to zoom into. But that helps, because this
and
is...
I think it's course points around making sure that you clear over the G20, that's part of the contribution.
Yeah.
With the World Bank, the data that he's sourcing there is raw data. It's data that's available. There's, as you said, from the year 2000 to now, and World Bank. So, these things are
voluminous.
Big data is what's available. And so for him to source the information that he needs, the data that he needs, it's not just sourcing the data, but he's got to analyze the data statistically. So that's where the positivist side comes in, because the data is not analyzed in the way and for the purpose that he wants to. So it's in one night or 2 nights, sitting at home without going to any bank, he can source that data out. So there's no fear in terms of accessing the data from the World Bank. It's very easy.
You get a lot of data on OECD countries. Or when you want to check for Africa, you get drips and drags there, so your data is not holistic.
Yeah,
so those are the challenges that you get from it.
Yeah, I've started now, I'm reading about how to deal with missing data because I saw that as well. So we are moving towards that as well.
More contributions?
Just want to ask, because I'm also interested in the positive negative thing, because it just says impact. So I still also want to know, do you think this is a positive thing or do you think it's a negative thing? Do you think it has a positive impact or a negative impact?
Okay. So Peter, I work for a bank. In banks, the money that we've spent on some of these things, we could have used it for something else, in building our profits. So when we talk impact, it can go either way. Your hypothesis will be allow it to go either way. Then you would analyze as it goes along. There are some that are positive, some regulations that are positive, but there are some that you go like, it's a drag. We're spending billions of rand on this thing, and then we're getting the outcome.
Yeah, I think in this case, can I just come and help you here? In this case, it's not about positive and negative. It's about the extent
of
the magnitude of.
Yes, but we still have to, surely you have to form an opinion about that, because
once it happens, you form an opinion, whether positive or negative.
But then also, and maybe you don't have to answer this now, but think about what makes it positive and what makes it negative.
Yes.
So we understand that it's not an easy, thing to sit amongst us, but I think it's a critical part of the journey to be able to be questioned by people that some of us who have no clue of banking, others who have extensive risk experience, others in other sectors but understand risk, so that you can see the pitfalls, because you don't want to come to the end of your study and all these things come to the fore. So I hope from today that you can take some of this. We do record it so that you can take it and re-look at it and listen to what people have said, and then hopefully to go back with your supervisors and rework some of the stuff and see where you can shift. And both colleagues that sit before you are also accessible to you through your supervisor, and so if you want to engage further on some of the topics that have been raised, they've both got also extensive research experience along obviously with your supervisor. So I think from that perspective we want to thank you, because we do understand it's not an easy road, and we wish you a lot of luck on the journey. And thank you for sharing.